This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us is a special guest that we've been wanting to have on the show for quite some time, Sprott's John Embry. It's great to have you here, John.
It's my pleasure, John, I guarantee you.
Well, we certainly picked a good time to have you on the show. It's been quite a week for the markets, and gold and silver in particular. Gold and silver both had another drive-by shooting last Sunday night, with gold flash crashing on Sunday night's Asian Open. Went right around from what was about 11:32 straight down to around 1078, 1080. Actually froze the market. They shut down the trading two different times, and we're recording this here on Thursday the 23rd. Both gold and silver have really kind of consolidated over the last 2 to 3 trading days, although trading down a bit here this afternoon on Thursday. So let's start right off with gold and silver and your take on the markets here and the trading action this week, John.
Well, I think this is like financial repression at its finest. As you may know, I have been a long-term believer in that there's an anti-gold and silver cartel that has been operating for many years. But it went into overdrive in about 2011 when silver hit $49, and then subsequently when gold got to $1,900 about 3 or 4 months later. And if you sort of put up a chart, I was just looking at a chart the other day that a friend of mine provided, showing sort of the expansion of the Fed's balance sheet against the gold price in this instance. It's remarkable. Everything was sort of in line until 2011, and since then the balance sheet continued to expand, and the gold and silver prices have been under extreme pressure. So this is not natural market action. I mean, this is basically an attack by the powers that be, and I think it's all orchestrated through the BIS. And they're trying to protect a fiat currency system, which is, I think, in terminal state. So this is going to be very interesting what unfolds in the next few months.
What's your thoughts, Eric, on the violent takedown yet again, almost reminiscent of a couple of years ago's takedown?
Yes, well, before the 9:30 open in the Shanghai Stock Exchange and other Chinese markets, for a period of about 4 seconds, we had over $2.7 billion worth of notional value of gold dumped on the New York COMEX overnight system. I mean, it was actually kind of funny, just to mention as a footnote, the initial reports out of the media and continuing on even to this day have had many journalists trying to blame this on the reaction to the Chinese gold declaration holdings that came out very late Thursday and Friday morning, with the theory and the trying to pin the tail on the donkey of, this is just the people reacting to the fact that China had announced a number that disappointed a lot of people, and they're bailing out of gold, and people are giving up on gold, and this is how they paint the tape when they do these kind of actions. And when they run the stops, they get a lot of traction and get the price of gold going down, and lo and behold, we're back below 5-year lows, going back all the way to March 2010. And, we've seen this happen time and again, where the cartel tries to get the most traction by attacking within periods of time that are most thinly traded. And the action actually prior to that week suggested that both metals both silver and gold are trying to bottom. And there's a huge amount of physical demand. It's continuing to expand, and you've got a great discussion about that coming up in a moment. So that's really the bottom line. It's the same old story we've seen over and over again about the cartel managing expectations, and the timing of this following the Chinese announcement was such that it was an attempt to change psychology in the market to one where expectations would be set to think of gold and silver as being in a brand new bear market and with no reason to turn around anytime soon. That's their goal. And when it comes to the mainstream, I mean, if you look at CNBC, it's like an endless pageant of people bagging on gold. Whenever these kind of events happen, they go into hyperdrive as well in the media in an attempt to shape expectations. So, but the bottom line, again, always is going to revert to the physical market, and the conditions are so tight that there's got to be a bottom at some point. It's just a question of when.
Yeah, we'll get to the physical market in a moment here. First, John, I want to ask you, we had your colleague Rick Rule on the show probably about 6-8 weeks ago, and he made an astute observation and something that I personally kind of felt, but hadn't really put it into words yet. And he said it really bothered him that the gold market hadn't seen a capitulation bottom yet, and he stated that he had seen that as the final conclusion to every previous correction or bear market phase in the metals, gold in particular. And I mean, certainly if you look at the mining sector this week, it's pretty much been obliterated. What's your take here? Are we seeing a capitulation? Is it in progress?
Well, Rick is one of the best market guys I've ever met. I thought that was a very astute observation. I would have said the stocks were cheap at the time he said that. But what you've seen subsequently is an absolute obliteration of the sector. Like the Huey index, which I think is the best gold index, was sort of hovering around 180, which was a breakout area. And they've dropped it by over a third since then. I mean, these stocks have been beaten to a fare thee well. And I mean, it's all part of, I believe, an orchestrated attack on the whole sector. And what people forget is how small these sectors are in relationship to the financial markets. There's allegedly $200 trillion worth of debt in the world. I mean, all the gold and silver shares don't amount to $10 trillion. So it's easy to attack these things, and they're scared stiff, because they know that they don't want the public to see these as alternatives to the paper currency system. And at some point, this whole attitude's going to change. But I have never, and I've been following this sector for well over 40 years, I have never seen such a coordinated attack, and all the mainstream press articles, they're everywhere, and they're just garbage. But they're having an effect, and the sentiment is horrible.
Reflect on the memoirs of Paul Volcker when he was speaking about the mistakes that he had and the Fed had made in the 1970s and 80s. The inability or ineffectual manipulation of the gold price and containing it was one of the only criticism he had for the performance of what the Federal Reserve was doing in managing the economy in those tumultuous times. So the Fed has learned its lesson.
Yeah, that was a great quote in Volcker's memoirs when he said when they were revaluing the Japanese yen against the U.S. dollar, they did not control the gold price, and that was a mistake. That was a very telltale comment.
I wanted to update the listeners now a little bit on the shortage situation, the continuing to develop a shortage situation in the metals, at least here in the U.S. What we're seeing with SD Bullion, as I believe we discussed on last week's show, maybe not, memory fails me currently. The U.S. Mint is scheduled to release more coins next week to the authorized dealers. However, they still have yet to inform the authorized dealers how many coins they will be able to purchase. They have said that the coins are going to be allocated, so they're not going to buy as many as they can, or as they want anyways. So it'll be interesting to see. We should know within about the week what those allocation numbers are going to look like. But in the meantime, the shortage has continued to spread and escalate across the retail sector at a wholesale level. Again, it started with the 90%, and 90% silver is pretty much gone. The largest mover, you can pretty much call them the market maker in the U.S. market on a wholesale level in 90%. They have 90% at no offer for about the past 10 days. That remains. And just today here on the 23rd, the Sunshine Mint has suspended all sales of their bars and rounds. They sell exclusively through A-Mark, and they have completely suspended sales on all the Sunshine products. Who knows whether the Sunshine get a little bit of pressure from the U.S. Mint to send them more blanks. That'd be just speculation, but it continues to substantiate the fact that there is a retail shortage of the metals. And really over the past week, and especially with the events last Sunday, the shortage has begun to spread to gold. Backdate gold coins have been wiped out of the market for probably about 2.5 weeks now, but even new, fresh, current year coins are now a couple of weeks out at all the authorized dealers from the U.S. Mint. And I can't remember the last time that happened, that gold coins are a couple of weeks out from the authorized dealers. So pulling up the numbers here for the U.S. Mint, so far month to date in July, the Gold Eagles, and again, we still have about a week to go here, but there's been about 127,000 ounces of gold sold at the U.S. Mint, and compare that to the month of May had 21,000, the month of April 29,000, February 18,000, and we're still a week to go in July here, and it's been by far the highest sales total. I think it's about 2.5 years for gold. So just the physical demand has exploded across the entire retail market here in the U.S., and it just goes to show that there really is not that much available supply. Because I mean, if you look at the big picture, the average investor still is not even, gold and silver is not on their radar. It's still just a very, very, very small segment of investors and investing funds.
I totally agree with that, and I quite frankly, John, I'm actually amazed that they have been able to access sufficient amounts of gold and silver to be able to carry out their paper crash of prices. I'm amazed, and I think we're getting very close to the end, which may explain why they become so aggressive in the paper markets, because I think they realize that they're going to lose control of this very shortly.
Yeah, or in the very least, it back off significantly in the, Bill Murphy managed retreat thesis style.
Well, yeah, I don't know how they're going to do it. Like, I think silver, quite frankly, is probably the cheapest thing on the planet these days in relation to everything else I look at in the asset markets. And it's a very small market. I mean, if you took all the above-ground inventory, and that's what is left over after the industrial demand takes the vast majority of the mining output, one wealthy individual could corner this market overnight. So this is really something that's unfolded, and I suspect it's going to be extraordinarily explosive when it goes the other way.
Yeah, and another thing too that's really interesting is that even in the mainstream, with, for example, HSBC at the turn of the year coming out and saying we're going to have a silver supply deficit in 2015 to the tune of 8% demand overshoot of supply. I mean,
that might be the first time they ever told the truth.
Yeah. Well, if anybody should know, it would be them, right?
Right.
Managing the ETF, the SLE. So, I mean, the default sport. So, anyway, I'd love to get your thoughts as far as what's going on at the silver open interest on the COMEX as well. I mean, a couple weeks back, we hit over 200,000 in open interest contracts, and we're down a little bit now, which suggests that there has been, in this back and forth movement of the volatility, some short covering, but and we're at, as of yesterday, if I remember correctly, 190,000 plus contracts as opposed to...
Well, it's very close. I mean, it did touch 200, but I mean, this is an extraordinarily elevated level. And I, quite frankly, what I don't know, and nobody can really well inform me, I don't know who's in the long side of the trade. Whoever's been there has been pretty resilient, keeping these positions at an elevated level when the price was, being driven south. Most people would have given up, and they would have, generally and historically, I mean, the open interest would have collapsed under this pressure. But this time it's been very different. And I think it's ultimately a positive, but we'll see.
Yeah, and just for the benefit of our listeners who may not know the particulars and the mechanics of what the open interest does typically on a COMEX, when the price has been declining overall for the last few years, the open interest has been going up, and that basically means that there is a layer of shorting and naked shorting coming into the market. And then on the other side of that trade, there are these mysterious longs, or long, but probably a handful of concerted long buyers who understand the silver shortage position and recognize that at some point the market's going to give, Cartel's going to have to back off, and they're taking the other side of that trade. But when you look back at 2011 and the peak of the silver market then, and gold as well, we had high levels of open interest at that point, but gold, as a normal display of market behavior, had its open interest decline significantly as the prices declined. Silver, on the other hand, hasn't been doing that recently, particularly in the last year. So there's definitely like a standoff at the OK Corral in the COMEX paper silver market going on now.
Well, I maybe I'm just sort of talking my own book, and but basically, I believe it will be seen in the fullness of time as a positive, even though right now it continues to weigh heavily on the market. These continual shorting. I'd like to believe that the people on the long side of this see the market the way we do and are positioning themselves because they know what's going to happen.
And the other interesting thing while we're talking about COMEX and the open interest is that really for the first time in my recent memory, John, there's been a massive amount of people who have ponied up the cash here for July delivery, really to jump the queue and take physical delivery here in July. I think it's closing in on about 4 million ounces right now, which is really unprecedented. And
well, I mean, I'm glad to hear that, because I think that's to break this stranglehold that the paper shorts have had on this market. That's the way to do it, because if you know as well as I do, there's remarkably little inventory on the exchange in relation to the open interest. So hopefully that will get this thing unlocked at some point.
And the people that claim that there's no wholesale shortage, it's just coins are at a retail minting level, that's a sign right there that there's a wholesale shortage.
There's a wholesale shortage. I mean, there's just so much misinformation in the market.
Speaking of misinformation, at your desk at Sprott and with your colleagues, you get a lot of requests from the media to discuss what's going on in the markets and help our fair weather journalists figure out what they're going to write in terms of spinning what's up. And I'm curious, have you seen any change in terms of frequency of people calling up Sprott looking for perspective, and also any kind of betterment in terms of the coverage with the reporters that report on what you folks are telling them when it comes to honesty? Or
no, absolutely not. I mean, I think the mainstream media is in the pocket of the powers that be, and they don't want to hear what we got to say. The public is not allowed to hear that. I mean, my attitude's very simple, Ed. I mean, in the modern world with the internet and everything, no one has an excuse for not knowing what's really going on if they've got an inquisitive mind. But if they read the mainstream press, they are not going to find out at all what's really going on, and they're going to be severely punished by that before it's over.
Well, I ask in part because every time we have one of these crazy flash crashes, typically on a Monday morning scenario, they're so stinky that they can't even be hidden. And I have noticed that at least a very small amount of coverage in the mainstream talking about, well, this probably wasn't a fat finger. It was somebody who had a concerted effort to execute prices.
Well, no, I think this one was so blatant, Eric, that even the most committed to sort of keeping the mainstream propaganda going, they had to at least pay lip service to the fact that this was unusual.
John, I'm curious, we spoke a little bit about the mining shares a moment ago, and I'd love to benefit from your 40-plus years of experience in watching the miners very closely. It appears that we've never seen the level of relationship of the bullion versus the miners express itself out to the point where the miners have fallen as far as they have relative to gold. And you can look at indices like or ratios like the gold to XAU ratio and other indices one can look at. Is that your perspective?
Well, I managed a dedicated gold fund starting in '94, I guess. And it was fun. We had ups and downs, but we made a lot of money. And I'm so glad I'm not managing gold assets on a day-to-day basis now on the behalf of clients, because this is horrific. I have never seen anything remotely close to this. This is an operation to almost destroy the industry as far as I can see. And I mean, they're so far out of line with sort of reality, even with the gold price depressed. But you see, like a lot of these companies, I own some up here in Canada. I mean, the gold price isn't that depressed in Canada. It's around $1,425. And I mean, you can make decent money today in a lot of these mining entities up here. So I think this is so far out of line, I'm almost speechless. And I think if we're correct, and I believe we are, that there's going to be a dramatic turnaround in the prices of gold and silver bullion. The shares at that point, because the market caps have been squashed down to nothing, and when money tries to hit this sector, it's just going to be something to behold. I think they're 10 and 20 baggers, and that's a strong statement, all over the share spectrum, on the assumption that gold and silver really reflect their true value in the not-too-distant future.
I mean, every gold mine in South Africa is operating at a negative cash flow basis.
No, I'm not sure I'd be that keen on South Africa unless I was positive that the change in direction.
I wasn't saying in the context of recommending per se any company, but just as an example of how bad things are.
Oh, they're horrible. It's absolutely it's unprecedented. I've never seen in 40 years anything remotely close to this in terms of the value of the shares in relation to longer-term reality.
So speaking of longer-term reality, do you have any sense as to like how many or what percentage of the supply could be curtailed in 2016 and beyond, just because of the fact that there's so many care and maintenance operations, mine closures, insufficient financing, on and on? I mean,
that's a great question, because I've been speaking for quite a long time on the subject that, based on what's been going on for quite a period of time, that the necessary exploration hasn't been going on. I mean, mine development has been curtailed. Mines are being high-graded. Mines are being depleted. I don't care if the gold price went to $10,000 in the next 2 or 3 years. Mine supply would fall, and there's nothing they could do about it. So I think that's just another major positive down the road. And those companies those good companies that are still in business, they'll be in such short supply that I think the amount of money that will seek them will drive them to prices that are unfathomable before this is over.
Yeah. I mean, there are some in the conspiratorial frame that look at what's going on and come to postulate the theory that, well, maybe the governments are intending to take over these industries once they kill them, or hurt them or injure them so badly the prices are so cheap they could do it. But
well, I think
chuckle
maybe
when I hear it. I chuckle when I hear that just because I can't even imagine the governments being able to manage.
No, I think there's a better chance that the elites, the powers that be, know perfectly well what's going on, and they're the buyers here when the other people are having to puke them.
Yeah, and frankly, the way bureaucrats work as well, in terms of the people who are taking the marching orders from the oligarchs around preserving the system, they probably don't even recognize the degree to which these longer-term dynamics are setting up because of their actions.
No, I think the one caveat that I would have longer term, and I mean this is considerably longer term, would be that if my sort of vision plays out and the economies really start to deteriorate and we have some maybe hyperinflation, all sorts of things that could go wrong, and gold and silver become the only games in town, and the markets, the profits go through the roof, I wouldn't be surprised to see excess profit taxes and all sorts of things but that's not something to worry about at these levels. There's going to be a huge play before that takes place.
Yeah, and related to that, confiscation probably isn't going to happen this time around. Just simply
I don't think so, because I mean America really isn't big on gold anymore. The gold's in India, China, Middle East, etc. I mean it would send a hell of a message if they tried to confiscate gold and silver in North America.
And it's so much easier too to just put the pressure on people like Doc and make coin dealers be the gatekeepers for the IRS for excess profit taxes. Who needs to do this messy knocking on doors or going to safe deposit boxes and banks where Americans and to a lesser extent Canadians really don't hold a lot of gold? So,
no, I don't see a 34 type scenario when Roosevelt, took the gold and then marked it up. I just think it's too global today. I don't worry about that particularly.
Yeah. Let's switch gears a bit to just talk about other current events. The Greek Parliament voted yesterday, again we're quoting Thursday, to approve the initial bailout package for the short-term lending. And there were defections amongst the Syriza party members. I believe there were, memory serves, 36 members of their party defecting on the vote and either abstaining or voting no. But they more than made up for it with the loyal pro-EU parties within the Greek Parliament. But going back to what I've been saying in a couple of our shows recently, most recently the last show, this isn't over. And as the economy, both in Europe and in Greece, begin to accelerate to the downside, which is what appears to be happening,
I agree.
and the screws are tightened with austerity, there's going to be a lot more pressure in the streets because the Greeks have, for the most part, behaved rather well through this whole process. And I still maintain that we're going to see the Syriza government fall, and who knows what kind of outcomes can come in that scenario. But I think it's going to happen within, say, 9 months' time. And I'd love to hear your thoughts, John, as far as what you think is going on in Greece.
I was under the impression, from pretty good sources, that there was quite a bit of coercion brought on top of the Greek government, that they sort of got the word internationally from bigger powers than them that they'd better knuckle under. And they did. But I don't think, they didn't sort of follow out the desires of the populace. So I suspect that as this thing moves forward, I think the public is going to become more fractious. The country is totally bankrupt. The EU can't acknowledge it because of the debt that's all through the system, and particularly the CDSs and everything that are written on the debt. So this is an ongoing saga. I don't know whether there is an end unless basically they defaulted and they left the euro, and then that would be a whole new ball game. Without that, I think this is just going to drag on, and there won't be any satisfactory conclusion.
Yeah, couldn't agree more.
And that's, again, all of these things that are happening in what I call the real world are long-term tremendously bullish for precious metals, because they're going to undermine the value of currency at an ever-accelerating rate. And at some point, there's going to be a collective realization, and God, I want to own something that doesn't have counterparty risk. What's better than gold and silver bullion?
Has the Sprott research department seen new information as far as what's going on in India vis-a-vis silver importation?
Well, I don't think we have anything that's particularly proprietary, but it looks like. I'm amazed if the Indian import numbers are correct, and I think they probably are. I don't know where it's all coming from. I hope I live long enough and there's an adequate explanation for how this has all been carried out, because I don't understand, given what I see for legitimate demand for silver, where it's all coming from at these prices.
Maybe Merlin has been reincarnated and he's figured out instead how to turn lead into silver.
Yeah.
Right. Well, John, before we wrap up the show here, I'm reminded of a couple of comments Jim Sinclair made probably about maybe 7 or 8 years ago, back around the 2008-2009 timeframe, and he repeatedly asserted that the bullion banks would be the entities that would make the most profit in this gold bull market, and not individual investors bullish on the metals. And also that the hardest thing in a long-term secular bull market to do is to be right and sit tight. And both of those quotes or statements come to my mind with current both sentiment in the market, which is just simply atrocious as we've discussed already, as well as the price action. So before we close, I just wanted to get what thoughts or suggestions would you have to investors who are disillusioned with the metals right now?
Well, I totally agree with Jim Sinclair, because I lived through the 70s, and I was a money manager then, and basically I held my positions, which most people didn't. There was a huge up move in this area through the 70s, but very few people made any money. The guys who made the money were the trend followers at the end. And I see the same thing unfolding now, and I think I think the bullion banks, etc., know perfectly well what they've done, and I'm sure that they're probably starting to load up on physical behind the scenes today, and they'll probably end up making more money than the public. And my only advice to the public is, don't have any leverage. So if the prices continue to fall a little further, you're not going to be put in a position where you have to sell. But these are the cheapest assets on the planet, and the shares are even cheaper. So to me, given that the stock market, the bond market, real estate are in my opinion grossly overvalued based on underlying fundamentals, I think that's an easy position, and everybody should have some of them in their portfolio today, and yet very few people have any, which is also going to be a big source of demand before it's over.
Sprott recently launched a new mining ETF. Would you like to tell our listeners a little bit about that?
Well, yeah, no, basically, we actually, an ETF that selects stocks. We're just not going with the index, so you end up with a lot of barrack in this. The guys are trying to have an ETF with stocks that we like, and I would strongly, at these prices, encourage people to have a look at that.
All right, we've been meaning to have you on the show for quite a while, John. So happy that we finally were able to make it happen this week.
Well, it's my pleasure. I think it's extraordinarily important what you guys are doing, trying to inform the public of what's really happening, because there's just so much misinformation. The average guy doesn't have a chance in this environment.
Yeah, we can share one anecdote that you'll find fascinating, and it may, in fact, even have some market intelligence to it. Make of it what you will. But say November, December, October, January, we never saw as much negative feedback as we saw in that period now. And at this stage, even though a lot of people are still very upset and expressing themselves, it's actually less than what it was before.
Well, that's interesting, because hopefully the ones that are still left, we understand exactly what's happening and what a great opportunity this is.
And in addition to that, it also seems that the sector has been bombed out so much and sector sentiment has fallen so low that the exhaustion level has even hit the perma bears who like to take glee when...
Yeah, well, as a matter of fact, you're right, Eric. I've seen some actually somewhat positive comments from people who have been perma bears.
Yeah, that too. So,
yeah, so on that happy note...
Yeah, well, if Kiko hires John Nadler or wherever he may be right now, then, you definitely need to go long back up the truck.
Yeah. All right, guys, it's been really great chatting with you.
All right, thanks for joining us.
Yes, my pleasure, and any time in the future, I'm more than glad to chat.
Well, we'll certainly love to have you back on the show. So for the Doc and Eric Dubin, our special guest, John Embry, thanks for tuning into this week's SD Weekly Metals and Markets.